Today we have 10 real estate exam questions on property taxes. I hope you do well on your exam. If you want hundreds of other questions, you can go to our channel, and we have many videos with more questions on various topics. Also, if you've never subscribed, please do so. It's free to do so. Hit the notification button so you don't miss a video. And also, if you like this type of content, help us out in the algorithm by hitting that thumbs up. Also, one other thing, if you have any questions, ask them in the comments below. So here we go. Which of the following types of taxes is typically levied by local governments on real estate owners based on the assessed value of their properties? A, federal income tax, B, property tax, C, sales tax, D, excise tax. B, property tax. Property tax is a tax levied by local governments on real estate owners based on the assessed value of their properties. It is used to fund various public services such as schools, roads, and emergency services. The assessed value of a property is determined by A, the market value of the property, B, the owner's perception of the property's value, C, the government's valuation for tax purposes, D, the insurance value of the property. C, the government's valuation for tax purposes. The assessed value of a property is determined by the government for tax purposes. It may not always align with the market value or the owner's perception of the property's value. Property taxes are usually assessed and collected on a monthly basis, B, quarterly basis, C, semi-annual basis, D, annual basis. D, annual basis. Property taxes are typically assessed and collected on an annual basis by local governments. The process of formally challenging the assessed value of a property tax or property for a tax purposes is known as A, tax evasion, B, tax avoidance, C, tax deduction, D, property tax appeal. D, property tax appeal. Property owners can formally challenge the assessed value of their properties for tax purposes through a process known as a property tax appeal. Before we go on, please hit that like button if you like this content. Hit the subscribe button and notification button. Also ask any questions that you may have in the comments below. Also check out our channel for hundreds of more questions. Which of the following is not a common property tax exemption? A, homestead exemption, B, senior citizen exemption, C, agricultural exemption, D, luxury exemption. D, luxury exemption. There is no such thing as a luxury exemption for property taxes. Common exemptions include homestead exemption, senior citizen exemption, and agricultural exemption. Property taxes are primarily used to fund A, federal government programs, B, state government programs, C, local government programs, D, international aid programs. C, local government programs. Property taxes are primarily used to fund local government programs and services such as schools, roads, and public safety. Which of the following may result in an increase in property taxes? A, decrease in property value. B, increase in property value. C, maintenance of the property. D, property being located in a rural area. B, increase in property value. An increase in property value typically leads to an increase in property taxes, since property taxes are often based on the assessed value of the property. A tax lien on a property is A, a lien imposed on a property due to unpaid property taxes. B, a tax deduction for property owners. C, a tax credit for property owners. D, a tax exemption for property owners. A lien imposed on a property due to unpaid property taxes. A tax lien on a property is imposed when the property owner fails to pay property taxes. It gives the taxing authority the right to seize the property if the taxes remain unpaid. Which of the following is true regarding property tax deductions in the United States? A, they are only available to commercial property owners. B, they are only available to residential property owners. C, they are available to both commercial and residential property owners. D, they are not available to any property owners. C, they are available to both commercial and residential property owners. Property tax deductions are available to both commercial and residential property owners in the United States, subject to certain eligibility criteria. The term millage rate refers to A, the amount of tax owed per 1,000 of assessed value. B, the property tax rate set by the federal government. C, the property tax rate set by the state government. D, the property tax rate set by local government. A, the amount of tax owed per 1,000 of assessed value. The millage rate is the amount of tax owed per 1,000 of assessed value of a property. It is set by the local government and is used to calculate property taxes. Well, I hope you did well on that exam. If you want more questions, just check out our channel. We have hundreds and hundreds of real estate exam questions. Also, if you haven't subscribed, please do so. Hit the notification button. Also, hit that thumbs up if you like this type of content. Ask any questions below. Have a great day.